Ernie requested a couple of changes be made to some of the tools, some of the powerful tools we like to use. We discussed, I think, 3 or 4 weeks ago in the long call and a long put strategy, or in the signature tools, we have this long option finder. And what the long option finder tool allows you to do is put in a stock symbol and put in your expected price of the stock. I'm going to use 73. This is Fortinet, by the way. I'll explain why I'm using Fortinet in just a moment. Your investment amount, and hey, I'm interested in the stock. I think it's going to move up. This is a good target price for it. I'm going to invest $1,000, and I think it might hit the $73 range maybe sometime in early May if the market continues as it's been doing. And we just click submit. And we see here the stock's currently at 66.46, so about a 10% increase, stock at 73. And below we have, what do we have? Below we have, what this tool did in that instant is it went out, it looked at every available option on the chain, did the Black-Scholes calculation for each and every one of those options, how many contracts we could buy with our investment, what it would theoretically be worth on our target date, and sorting it by the highest percent return on the position. Well, Ernie wanted to add some other information here, some quick other detail in here, and that's on the break even as well. What Ernie also did from a coaching session he had earlier this week is originally this tool only showed the top 10 or so results because, normally your focus would be on the percent return. But the gentleman, he was on the coaching session when he said, well, how can I compare it to the others? Even though I see that it doesn't have the highest potential return based on the Black-Scholes pricing model if my targets are hit. What if I wanted to look at other columns, and you can add different conditions and add, now you can add these conditions in as well to screen again, so I'll do that in a moment. But Ernie wanted to add in the break even and the ability to sort if you wanted to, from lowest return, which might have a higher probability, to the highest return, which might have a lower probability. But remember, it's not targeting probability, it's targeting your target price on your target date. Which option would give you the best bang for the buck? I'm likely taking one of these top 3, depending on what my outlook is for the position and what return, they're similar, but what return I'm looking for. But yes, the break even now does come into my consideration a little bit. I just used the profit and loss chart to do that before, but Ernie had the suggestion and made this change. So similar to what we're talking about with Shashir, if I'm buying calls here, if I wanted to limit any call options, for example, where the current implied volatility of the call was, say, less than, let's see, where my implied 0.39, because I don't want to pay into too much volatility, would automatically filter those. So now every option that appears, and still my top ones do have the lower volatility, they didn't reach that higher implied volatility area. This is not the percent implied volatility range. I might add that in myself or have the programmers add that in for me later on. But this is just another thing that you can do now on this tool for more sorting, and you can increase the number of entries if you wanted to see more results than the top 10 or the top few that offered the highest return. It's just what the customer wanted to see. It was a simple addition, and we decided to change the dynamic on this long option finder as well. Now, why did I use Fortinet as an example? Well, just reviewing our recent married put trades that are available in the Fusion portfolio at RadioActiveTrading. In the last week, 2 weeks, we opened 3 new positions. AMD, it's holding its water here, but it's been up as high as 101, back down to 95. It is a wild ride. I've only been in it for 14 days. Should have sold a call against it. We're carrying the 110 put for a risk of about 7.9%. Academy Sports, this is an interesting one. And again, as I mentioned, I look for positions I feel have the potential to move up 3 to 6% in the next 20 to 40 days. We've moved up 2.5% in 8 days, but it's been a strong market. We could liquidate right now for about a 1% return on the position. Not quite ready to do an income method on ASO yet, but it's really, really close. Fortinet, this is one I was watching for a while, thought I had missed it, got in at 62.99, but it's up to 66.46. We've got a 5.5% gain in the stock in the first 7 days. That's why I use that example. And that 73 strike Stock price I mentioned, I would love to see it, but I don't think it's going to move up another 10% in the next month and 4 days. But I do think it has the potential to at least reach 67 or 68. I could do an income method number 4 on this right now and cut my risk in half, or close to half. It's not quite half yet. One of our Fusion subscribers, Edward, did email me on Thursday and said, now that the stock's above your put strike price, are you going to do anything? I said, not just yet. My max risk is 8. With the prices I saw that I could get filled at, I want to make sure that this risk gets lowered to 8%. My first income method, taking advantage of that put. It's sort of at the money now with the at the money bell curve. So the time, although my put has decreased in price from where I bought it, when I bought it initially, $2 was time premium. I'm sorry, $2 was intrinsic. $5.50, the risk, of course, was the extrinsic value or time value. Now the stock's trading at 65. It's still retaining all of its time premium, a little bit less. But what can I do? If I moved up to the 70 at 760, that's now about 3.5, 4 points in the money. So only 360 of this cost would be time value. Did I add the second? No, I didn't add it in a second time. There we go. So if I move this put by selling a close to 65 and buying the 70, it's going to be done at a debit of about 240, 250. But I'm going to gain 5 points higher payout. My cost basis does go up, but my risk drops to 4.3%. Another reason why I haven't done this yet, this is for Edward, is that I also want a stock to move up a little higher because Fortinet, unfortunately, doesn't have weekly options. And it only offers, as we saw, 5-point strike differences. I want to get a little bit more premium on this April 70 call. I think it could move up towards 70 if this market condition continues. But if it does pull back, if we start seeing enhanced sell warnings, that would be a good time to sell the 70 call because we'd be able to close it or have it expire. So now I would have lowered the risk down to 4.3%. And going further, then we could lower it down to 3.6%, that 50% I mentioned I wanted, with a potential return of 4.5% if the stock's up at this price at expiration in the first 28 days of the trade. So I'll accept that, but I'm not done with it. I think it has more room to go. I might not even sell the call. And a comment comes in, could you do other adjustments other than selling the call? Of course I could. But these types of stocks don't condone that. It wouldn't make much sense to do an IM number 6, that riskless spread trade, the bear call spread, where I don't have to put up the margin, but it leaves the upside open in the married put. Ratio spread IM number 5, you're not going to get a credit with these type of strike differences on just monthly options. It just doesn't work that way. You need something a little bit different, a little bit more volatile. Fortinet is a different type of play than an aggressive income play. It's more designed for growth, and that's why I got into the position. And we're seeing the growth that we want. We have the chance to do an income method on that right now. We just rolled the Newmont mining call from the March 31st 47 strike. The stock was at 48.90 or so, and we did it. We rolled it up to the 49 call for $1.60. Moved our potential return from 7.3 up to about 10.7%, as I mentioned. And of course, Fusion subscribers will see something similar to this. This view is a little bit different. But yeah, there's the Newmont. If I liquidate it today, it was a 7.2% return. But now that I've moved the call out, the stock's at 49, we'll make a 10% return in 21 days. I'll take that 2.8, 2.9% increase for 21 days. I'll take that if we get closer to that 10% on the position. And of course, there's the Fortinet position I mentioned, original risk of 8%, and Academy Sports 6.5. And Ernie's positions, negative risk. He's got bulletproof on BOX. No risk trade with still unlimited upside available. And of course, some other positions he has with current liquidation profits of 8%, 2.5%, 4.5%. But as I mentioned, I'm not done with mine. He's not done with his yet either. So just a review there of some of the recent trades. There's one or two more trades I'm looking to get into, as I mentioned. ALGM was, I'm sorry, let me go back to the search. ALGM was, oh, it's not there anymore. That's interesting. It fell out after the latest update. It dropped. It didn't fall out. But see, there's my advanced micro devices. You had said earlier, Shashir, that you had gotten out of the one position that went against you, did PanW, and you did another trade here. But PanW, of course, is in the search results also. Wingstop has been on a run recently as well.